Did the US just ban crypto? Are they gonna make it harder for you to earn those fat returns? Or are they actually looking out for us crypto folks? Well, this Tuesday, brand new legislation was introduced, and I'm gonna tell you exactly what it means for you. Now, spoiler alert, crypto isn't going anywhere, but this does have interesting implications for the cryptoverse. Okay, let's get into it. So what just happened? Well, on Tuesday, June 7th, two US senators introduced legislation that is focused on crypto. The goal of which would be to sort of tame the wild west of crypto, which maybe that's exciting for you or scary. Let's hope the days of the degen crypto investor are not numbered. In fact, just that part is a big deal. This was introduced by Republican Senator Cynthia Lummis and Democrat Senator Kirsten Gillibrand. So that means this is a bipartisan legislation, which is pretty cool. The legislation itself is nearly 70 pages long and goes into a lot of detail. And don't worry, I'm not going to read it to you line by line, but maybe you should, do your own research. What I'll do instead is cover a few key points that affect crypto investors like myself and you instead. And by the way, if crypto education is important to you, and it should be, well, then you should look down in the description to find the link to join Sleep Money Club. We've hired a bunch of teachers and educators who are going to be in Sleep Money Club to help you to succeed even now in this down market, and especially going into the next bull market. And again, link in the description for that one. So one of the biggest things in this legislation, in my opinion, is they want to put systems in place to determine which cryptos out there are commodities and which are securities. Now, first, I think this is a big deal and a really good thing that they're discussing treating some cryptocurrencies as commodities at all. And in case you didn't know, a commodity would be something like oil or gold, and a security would be something like stocks. And both of those things are regulated by two different organizations in the US. Commodities are regulated by the CFTC, the Commodities and Futures Trade Commission, and securities are regulated by the SEC, or the Securities and Exchange Commission. Now, most cryptos by default would be classified as commodities unless they pass the Howey test, which is the test that determines whether something is a security or not. Now, the good thing about cryptocurrencies like Bitcoin being determined to be commodities instead of securities is, one, the tax implications for you are a little bit less, and the regulations overall are a little bit lower. And one of the really cool aspects of this is this could be the thing that paves the way to a Bitcoin spot ETF. And this is a massive deal because this would basically make Bitcoin much more easily available and accessible to tons more people all of a sudden. Instead of having to use sometimes a difficult crypto exchange to buy Bitcoin, this would mean in just about every single investing app or brokerage out there, you could buy Bitcoin essentially. Or better yet, all of a sudden, you can now buy Bitcoin directly in your Roth IRA or your 401k or what have you. So needless to say, that alone could be huge for adoption. And you know what else is huge for adoption? Smashing that like button. When you do that, my video gets seen by more people, and the more people that see it, the closer these videos get to mass adoption. And while you're at it, don't forget to hit that subscribe button and that bell icon as well. Now, this legislation also has really big news for miners, stakers, and node operators. In fact, here is a quote directly from the bill. In the case of a taxpayer who conducts digital asset mining or staking activities, the amount of income relating to such activities shall not be included in the gross income of the taxpayer until the taxable of the deposition of the assets produced or received in connection with the mining or staking activities. Don't you just love legal jargon? In other words, this is really good news for crypto miners, stakers, or node operators, probably. And the reason it's good news is because your income from these activities would no longer be seen as income, and therefore it would no longer be taxed on the daily, on the regular as income. Instead, you would just pay taxes when you sell it or convert it to fiat currency. This is absolutely massive in my opinion because currently, technically what you're supposed to be doing with your mining profits is every day as you get them, you pay taxes on them as general income, and then you pay taxes again when you cash them out. And this legislation will remove half of that tax burden. Next up, let's talk about stable coin regulation. And man, this is a topical one now, isn't it? This legislation would require stablecoin issuers to have a 100% reserves and publicly disclose all the assets backing their stablecoins. Now, this doesn't mean in the case of a USD-based stablecoin that they they have to have a 1-to-1 ratio of the stablecoin to US dollars, but it does mean for every $1 stablecoin, there has to be $1 worth of assets to back it up. So I'm sorry, Do Kwon and Terra 2.0 or 4.0 or 10.0 or whatever you want to drop on us, and whatever algorithmic stablecoins you want to dump into the market next, you're out of luck, my friend. And speaking of stablecoins, I've actually been putting more and more of my crypto profits and just money I want to sit waiting in the wings for good buying opportunities into USDC. I think USDC is one of the best stablecoins out there. It has a backing of 1-to-1 in US dollars, which is awesome. Okay, next let's talk about cryptos as payments. Everyday transactions, buying your coffee or your dinner with crypto. This bill wants to hopefully encourage people to do just that, to be able to use crypto on the daily, to finally get that mythical cup of coffee with some of your Bitcoin, if you so choose. And they hope to accomplish this by having any transactions that you make with crypto that are $200 or less be exempt and be a non-taxable event. Previously, tax has been a very big barrier to using your crypto on the daily because you have to pay when you convert it in taxes, and it's this whole big mess. So this type of legislation would actually really help with people using crypto for daily transactions. So I just covered some of the top points that I thought you might really care about that are being introduced in this legislation. But what does all this stuff mean for you directly? Well, you don't need to do anything in particular right now, but you should be paying attention to this. As more people get eyes on this, as it passes more rounds through the government, it's likely going to go through some changes and some iterations. So you'll want to know exactly what those changes and iterations are before the thing has a chance to get passed. But overall, I think this is probably good for crypto. Yeah, there's things in it that probably need to be changed, but is going in the right direction. In my opinion, for crypto to succeed, especially at a nation level, we need to have regulation and a way for it to fit into our existing systems. And legislation like this paves the way towards that. But something else you can do is watch this video right here where I talk about how I'm still making $33,000 per month in crypto passive income. Otherwise, I hope I didn't bore you with some legal speak, and I will see you in the next video. Goodbye.